Okay, joining me now, disruptive tech research founder and chief analyst Lou Basenese, and also here all morning long with us, James Freeman and Brian Brenberg. Lou, let's go ahead and talk about what we're seeing with respect to this GameStop story. There are so many different facets to it, and I want to start with the first part, which is this idea of censorship of the masses, if you will, with the ban that came on trading, at least for the retail side of it, from Robinhood, for example. Is that what was happening there? Some people are saying they were just trying to raise money, shore up the books to make sure they could handle the kind of activity they were seeing. Your thoughts?
Yeah, look, I said this yesterday in a video to my readers that this is absolutely censorship. It's censorship of our dollars and actually our words when they shut down bulletin boards like Reddit. I mean, we've seen it happen across the board in Facebook groups, but it is censorship, and here's why. It's selective, right? Trading in GameStop, if it was really a systematic risk, should have been entirely halted by the NASDAQ, by the exchanges, not selectively by brokers. Here's the thing. It's not our fault. It's not everyday Americans' fault that TD Ameritrade, that the systems got pushed to their limits, that Robinhood got pushed to their limits, and the volatility caused some capital concerns for them. They should have figured that out. But here's what it is. If we go back a layer before, it's because there was this race to zero commissions. Nobody complained when they got all these new clients, when everyday Americans were piling onto these platforms to trade stocks. But in that, because they reduced commissions to zero, they didn't have the money, the risk, the premium to pay for insurance against volatility like this. So I do believe it's a legitimate excuse. I'm going to call it an excuse because at the end of the day, they chose Wall Street over Main Street by selectively restricting Main Street in trading.
Okay.
And it's almost unconscionable to think that this happened, that we were told. What really irks me is that the chairman of Interactive Brokers gets on national television and says what we're doing is illegal and manipulative, when this is what's been going on Wall Street for decades. So we're not doing anything different. The smart money just got one up by the dumb money, and they don't like it.
Okay, well, that could be the case, but then you've also got the regulators, you've got the SEC, you've got Janet Yellen, you've got the administration all saying, oh, we're watching this, we're watching it, but we're not actively doing anything about it. As you mentioned, it's one thing that, for them to be able to step in or make the markets put a halt on these trades. Is this something that we're going to look at in a while in the rearview mirror and say, they should have regulated this, they should have protected people, right? The stock keeps going up. As long as it's going up right now, it's only the big guys who are getting hit, and we'll always say, oh, well, they can afford it. But when the guys, play musical chair, the retail investors, and somebody doesn't have the chair to sit in, it's going to sting.
No, agreed, Jackie, and fair point. I think GameStop and most of these stocks are garbage, fundamentally. There's no reason to own them if you're really an investor, not a gambler. But I do think we're going to look back. There should be regulations, but it's not about trading. The regulations here, the problem in short squeezes is the fact that the regulations are too loose around how many shares can be sold short. Market makers are not required to secure the borrow on the shares for options trades. So that's an area in the market where that needs to be regulated. You need to make sure that there are actually shares to borrow to sell short before it happens. That's not happening in the options market. That's why GameStop had 140% of the shares available to short sold short. It shouldn't happen that way. But it set up the dynamics for when a bunch of people pile in to buy the stock. It does exactly what we're seeing again today. So this is more systemic risk that needs to be addressed, but it's not at the level of the everyday American and Main Street. It's really how the market has been set up to control risk on short interest.
Yeah, and we have been talking about this story all morning in all different ways. James, Brian, and I. Brian, a comment from you.
Yeah, Lou, I just want to talk about short selling for a second. I mean, this has been controversial from the very beginning, and especially in this country in the 20th century. The fortune of being able to sell short has actually, been on the agenda in Washington for a long time. You're hearing people talk about it again. Does short selling go away as an option in the market, or do you see it more as restricting sort of the percentage of outstanding stock that can be shorted?
Yeah, look, I may surprise you. I love short sellers. I'm not a short seller, but here's why. I do a lot of work with them. They do the best research on the street. They're necessary in this market. But it's a supply and demand thing. To your end point there is you have to make sure that you're not shorting more than is available to short. If we correct that imbalance in the market, I think short sellers are a tremendous balance. They are a way to mitigate volatility in the markets. Like I said, they have unlimited risk on the upside, so they do their homework better than any longs do. And I'm a long investor, and I happily admit that.
Yeah, and I just want to take that a step further. You buy a stock at $10. All you can do is lose $10. It's it's going to go to zero. When you short a stock, as you said, what could happen to you is unlimited if that trade goes against you. And those guys do tend to be very smart. James, I wanted to get your sense on, where this is going as we move forward.
Yeah, I really hope there's no regulatory action that protects short sellers, hedge funds from the consequences of their investment decisions. I think if there's a lesson so far for the individual investor, or at least one of the lessons, is don't emulate these hedge funds borrowing money to make a large concentrated bet on one company, and specifically on its demise in this case. These guys, I think it raises questions about the people who are lending them money, and is that prudent to lend to hedge funds? And I think maybe it's an issue for the big banks and their prime brokerages. Do you want to fund this kind of activity? But I certainly hope that there's not some regulatory impulse seizing on this moment to either harm individual investors or to protect hedge funds, which should have to live with the risks they're taking.
Amen, James. They should, right? Like, look, I'm a retail investor. I came out of the institutional side. I've made bad investments, and I've had to pay the price for it. That's how you learn. I always say you're either humble in the markets or you're humbled by the markets. There's going to be a lot of people that get humbled when GameStop collapses, when these fundamentally flawed companies like AMC, I mean, they're on the brink of extinction because no one goes to the movies anymore, and they have a ton of real estate that's really worth nothing because it can't be repurposed. But to your point, I'm equally optimistic and hopeful that we don't intervene in a way that condones more bad behavior or allows Wall Street to continue doing what they're doing. There's more education that's needed. People need to understand the risk of using margin.
Yeah, they do.
We need to I don't think the everyday person understands how quickly margin can work against you. It's a double-edged sword. It works for you and can work against you. It cuts you both ways.
They don't, Lou, and unfortunately, most of the time they'll get, as you said, they'll learn from experience, but it is rather painful when you learn the hard way like that. Investor education is so important when it comes to putting the average guy in the marketplace to play against these bigger shops. That really is where the focus should be. We were saying that earlier, but it's great to see you this morning. Thank you.
Thanks, Jackie.